Hello everyone, welcome back to the channel. Today we're going to talk about ARK Invest or ARK Innovation ETF. I will talk about their way of investing and also will explain why I don't invest in this ETF, but what I do with it. Please smash that like button and subscribe since it really helps my channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below, as well as a link for the 3 free stock with Webull when you sign up with them and deposit $100. But first, let me know in the comment section below what you think about this ETF, if you have invested in this ETF or you prefer to invest in individual stocks. As many of you might already know, ARK Invest is an index fund that invests only in disruptive and innovative companies in which they believe those companies have long-term growth in the public market. These are active managed ETFs, which means that they enter and exit positions trying to have the best and higher possible return throughout the years. They offer different types of investments in which they invest in different sectors. They invest in autonomous tech and robotics, genomic revolution, next generation internet, fintech innovation, space exploration, mobility as a service, 3D printing, Israel innovation, cryptocurrencies, and the ETF with the most exposure to disruptive innovation that is called ARK Disruptive Innovation. All of them have a particular name, ticker symbol, and invest in different sectors. For example, the ARK Next Generation Internet invests in companies like Tesla, Square, Roku, Facebook, Zillow, and more, while the ARK Autonomous Technology and Robotics invest in 2U, Tesla, Xilinx, and more. I do have to say that I have a way more in-depth analysis video in which I go through every single fund explaining what they invest or in what they have more exposure, so I will leave the link for that down in the description below. Now, ARK Invest do not tend to have more than 10% in a single stock of their portfolio, and when a stock surpasses the 10% of the portfolio, they rebalance their portfolio to get it back to 10%. For example, in these two with Tesla and Invitae, both are over 10%, and two things can happen. One is that they would sell a small portion of that position to rebalance their portfolio, or if the stock drops, it will rebalance itself. But if they sell a more portion of that position, it means that they will have more cash in hand to either invest in other growth company or just hold it until the stock has a correction and invest again in that same stock. We do have to take into consideration that the pandemic has accelerated the growth in many sectors and have brought a lot of changes that we expected to happen but later on, maybe 3 to 5 years, but not right now. And that has made a lot of companies grow massively in a single year. For example, most people are using Zoom to communicate or watch classes online or work remotely, doing exercise from home with Peloton and more. That is something we knew that was coming but didn't imagine it was going to happen this year, and because of the pandemic, now we're seeing it every day. Now, if we compare this ETF with others like the S&P 500, we can see that in the last 5 years, the S&P 500 have had a return of 73.50%, while ARK ETF a massive return of 376.51%. Now, don't get me wrong, 73.50% return in 5 years is a good return as well, since that is like 14% return year over year, and that is actually pretty nice. But over a 370% return in 5 years is over 74% return every single year, and obviously that is more impressive. Now, if we compare with a more similar ETF, a more technology concentrated ETF like the Nasdaq, we can see that the Nasdaq have had a way better return than the S&P 500, but not that better than the ARK ETF, and that is why most people prefer to invest in growth, innovative, and disruptive companies, because even though it might be riskier, the return might be way higher than investing in more secure companies. I do have to say that I'm an individual stock investor. I never thought of investing in an ETF since I prefer to do my research and invest in individual stocks. But I do have to say that ETFs like ARK Invest could help investors like me, or could give us an excellent investment ideas. It could help us start investing into new markets that we knew they existed but did not know the growth potential that they have, and could also help us find high growth potential companies because they have a bunch of analysts investigating and analyzing a lot of companies at once. Well, in the meantime, I'm a single person, one girl on YouTube, analyzing one company ever so often. And this ETF could help us accelerate the process of finding new high growth stocks. For example, ARK Invest just invested over $19 million in Palantir stock, which is a total of 1.064 million shares, meaning that right now they have an average price of around $17.9 per share share, which made me rethink my analysis on Palantir. I did a video about it when they went public last month and thought that maybe $17 was high, and now seeing them invest in those prices makes me want to go back and reanalyze that company to understand even more their way of thinking and their way of analyzing growth stocks. That is why I like to track this ETF, because it gives me excellent investment ideas and also gives me an opportunity to learn more about stocks that I have never heard before. Now, why do I like ARK ETF way more than other ETFs? As Catherine Wood says, other ETFs like the S&P 500 invest in the wrong places, since they are not investing in the new normal or the future. They're investing in what has been working for years and years, but the truth is that that does not mean that it will continue working more years. When innovation happens, we don't turn back. The pandemic has accelerated innovation in our day-to-day, meaning that all companies that have not been able to innovate are staying far behind, and sooner or later they will be forgotten. That is why I invest in companies like Square, Upwork, or even Lemonade, because their business plan or their intentions are to disrupt or innovate an industry or bring new and very futuristic things to our everyday. Now, something I liked a lot is the way they see things. They posted a video talking about the 5 reasons to pay attention to digital transformation. The first one was streaming, since right now it is used by people to deliver more and more content. We have a lot of YouTube channels sharing very interesting information, professors at school sharing educational videos. Right now, consumers have instant access to a huge content library in YouTube, Netflix, Disney+, Apple TV+, Teachable, and way more platforms that could help us grow as a person. According to ARK Invest, quote, streaming is becoming the primary technology behind the content distribution. The second reason is remote work. Because of the pandemic, a lot of companies have to transfer to the new normal and send all their employees to start working from home. Obviously, working from home requires new tools and softwares that companies were not used to and nowadays are implementing in their everyday life. Because of that, we are already seeing a lot of companies that decided to start remote working undefined, meaning that they do not have any date set in their calendar to go back to their office. And that is where you see all these cloud computing companies and online communication companies massively growing and growing even more. The third reason was the expanding gaming ecosystem, which is expanding more and more every single day, and even more without live sports going on. As you can see in Twitch, the average concurrent channels almost doubled. They reported 963 billion minutes watched this year, which is up 64.5% year over year, and our stream has also massively increased. The fourth reason to pay attention to digital transformation, according to ARK Invest, is zero contact service industry. The service industry represents more than 50% of the world GDP and has been impacted by the pandemic, but it has also been able to work it out and improve. Companies like Amazon, Peloton, Uber Eats, and more have seen a growth opportunity during the pandemic and have been able to surpass their numbers. The last reason is social commerce, since it involves social interaction and user contribution to assist online buying and selling of products without people having to go anywhere or have physical contact with anything or anyone. This is basically what ARK ETF focuses when investing in any company, since these 5 things are the sectors that have accelerated the growth this year, and they expect to continue like that for a very long time. So if you ask me, in my opinion, ARK ETF is an excellent investment for the long term if you feel more comfortable investing in ETFs than in individual stocks, since they are focusing in disrupting and innovative companies, which in the end is the future, which is really more near than we thought, since innovation has accelerated their pace because of the pandemic. But if you like to invest in individual stocks like me, then I recommend you to read their articles, watch their videos on their YouTube channels, and analyze their investments, since it could help you find excellent companies that could provide you huge return and good growth potential in the long term. But remember, I'm not a financial advisor and you should do your due diligence. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps my channel out. Remember, I have a completely free Discord group chat, which the link for that is down in the description below. Thank you and see you next time.